So Assalamualaikum warahmatullahi wabarakatuh and good evening to everyone. So today our group will present a policy which is Goods and Service Tax GST in Malaysia. So this is our group members, which is first we have Nur AMYLIA binti IAZHAR, and the second person which is me, NURUL HAZWANI binti MASHAH. The third person is SAFIYYAH binti Muhammad SOFIAN. The fourth person is Raja ALIYA SHAFIQA Raja ROSEAZRI ASHAR. And the fifth person is ZULAIKHA binti ROZLAN. And the last person is SITI NAZIRAH binti MAZLAN. So this is our content, which is first we will introduce the overview of the GST and then the policy problem, the objective, the strategies, the weaknesses of GST and recommendation of GST. So the first, right, GST is a goods and service tax. It is a multi-stage tax on consumption of goods and services. It is known as value-added tax in other countries. It shall replace the current sales tax and service tax. GST is charged on all taxable supplies of goods and services in Malaysia, except those specifically exempted. GST started implement from 1 April 2015 before replaced by SST again on 1 September of 2018. So there are three key features of GST in Malaysia, which is the first one is value-added tax system, which is GST was a value-added tax system, which is VAT, that was collected at every stage of the production and distribution process, just like other VAT system around the world. Companies could claim tax credits for the GST they paid on the input, which is purchases, and were obligated to pay tax on their output, which is sales. The second one is taxable goods and service. With the exemption of certain exemption or zero rate commodity like basic food item, healthcare service, and some education service, GST was applied to almost all goods and services in Malaysia. The third one is exemption and zero rating. Zero rating. Before that, we have two types of exemption and zero rating, which is the first one is zero rated commodities and second one exempted goods and service. The first one is zero rated commodities, which is export goods, essential food item, and some healthcare service were among the items were that taxed at 0% rate, enabling enterprise to receive input tax credit. The second one is exempted goods or service. Certain goods and service were completely exempted from GST, which means that company were unable to receive input tax credit for the purchases of this item, like financial service, for instance, were typically exempted from GST. So I will pass to the next presenter.
So I'm going to proceed to my part, which is I'm going to explain about policy problems for the goods and service tax GST. So there's 4 points here. The first one is double taxation effect. Before GST, the original consumption tax system implemented in Malaysia was the sales and services tax, which is SST. Double taxation arises for SST, which is imposed on sales 10% and services 6% until 8%. When the tax element is included in the cost at every stage of the supply chain, it can lead to double taxation, as goods may be taxed more than once. SST is less transparent to consumers because taxes can be hidden in the prices of goods and services. So my second point is economic crisis in 2009. The global economic downturn in 2009 significantly affected to Malaysian national income, leading to a reassessment of its tax system. So the government sought to replace the decades-old SST with a more comprehensive tax structure that could be better withstand economic fluctuations. So the third point is revenue concerns and economic conditions. So before 2010, Malaysia's economy and revenue generation were largely dependent on oil and gas income. So policymakers were cautious about implementing the GST during time of economic uncertainty or when global oil prices were highly volatile. They were also mindful of the timing of the tax introduction, especially in the context of global events like 2018 financial crisis. And my last point is inflation concerns, which is although the GST was introduced as a measure to stabilize government finances, it was implemented in an environment that already prone to inflation. So critics contended that the GST further drove up living costs, disproportionately impacting lower income households. That's all.
Next is objective. The first major objective of GST in Malaysia was to burden the tax base. Prior to GST, Malaysia relied on that sale and service tax (SST), which covered a limited range of goods and service. By replacing SST, the government aimed to apply tax to a wider variety of transactions. This approach was designed to reduce the dependency on just a few sectors for revenue and ensure more comprehensive contributions across the economy. Another key objective was to enhance the efficiency of tax collections. GST operates as a value-add tax applied at each stage of production and distributions, allowing business to claim input tax credits on the goods and services they purchase. This system minimized the chance of double taxation and encouraged accurate reporting. The nation's government believed this multi-stage approach would improve transparency, making it easier to track and reduce error in tax collections. Next, a major challenge under the previous SST system was tax evasion. With GST, Malaysia introduced a structured multi-stage system that reduced the incentive for businesses to under-report sales. By allowing companies to claim tax credits on GST paid, the government encouraged proper documentations and compliance. This objective was critical for ensuring that Malaysia's tax system functioned fairly and effectively. The fourth objective was to create a more reliable sources of revenue. Malaysia's economy had historically relied heavily on natural resources for income, especially oil and gas. By introducing GST, the government sought to diversify its revenue sources and create a more stable financial foundations. This was particularly important to sustain the country's development projects, healthcare and education system, providing a steady stream of funds.
So I will continue on the strategies. Point number 1 is expanding revenue through a broader tax base. By covering more products and services, GST allows the government to capture revenue from a larger segments of the economy, including industry and items previously untaxed under the SST. This shift not only increases government's income directly, but also distributes the tax burdens more evenly across different sectors, which can reduce reliance on high taxes in specific areas. The multi-stage nature of GST also means that taxes are applied throughout the supply chain, not just at the final point of sale, which further improve revenue collections and adds consistency across economic activities. So point number 2 is enhancing transparency with multi-stage taxation. These multi-stage collections ensure that tax contributions are distributed across each level of the chain, minimizing the risk of tax gaps and ensuring a continuous flow of revenue. This strategy reduces inefficiency by allowing for more accurate tracking and recording of transactions at every stage, as each participant in the supply chain contribute to tax collection. It also promotes better compliance, as businesses are incentivized to report their transactions accurately to claim input tax credits. Overall, the multi-stage design of GST supports a transparent, consistent, and reliable revenue system that aligns with the government's goal of reducing inefficiency while increasing accountability across the economy. The third point is incentivizing accurate reporting to curb tax evasion. By allowing businesses to claim credits for the GST paid on their purchases, the system creates a strong incentive for accurate reporting. The businesses are motivated to record and report their transactions correctly in order to recover this tax amount, making the process of compliance beneficial rather than burdensome. This strategy builds accountability into the tax process as each transaction is documented for both the purchaser and the seller, creating a paper trail that enhances transparency. The ability to claim input tax credit fosters a culture of compliance across the business ecosystem, discouraging underreporting and tax evasions. Overall, this input tax credit strategy promotes a self-regulating environment where accurate tax reporting is encouraged, directly supporting the government's objective of building a more reliable and a fair tax system. The last point is driving sustainability revenue through tax-based expansion. By expanding the range of taxable goods and services, the GST ensures that more sectors contribute to government revenue, making the system less reliant on a few high tax areas. This approach strengthens the overall tax framework, ensuring steady and reliable income for the government. The input tax credit mechanism further strengthens this strategy by ensuring taxes are collected at each stage of the supply chain rather than just at the final point of sale. This multi-stage collection system encourages businesses to comply with tax law at every step, reducing the risk of tax evasions and ensuring that revenue generation remains consistent throughout the entire supply chain. In doing so, the GST promotes a more resilient and transparent tax system that aligns with the government's long-term revenue and economic goals.
So there are three strengths and weaknesses of GST in Malaysia. So one of the biggest strengths of GST in Malaysia was its ability to eliminate double taxation, an issue that existed under the SST. So SST was a single stage tax applied at specific points, often leading to a cascading effect where taxes were applied multiple times across different stages in the supply chain. So, in contrast, GST is a multi stage tax with an input tax credit mechanism, meaning that businesses can claim back the GST that they have paid on inputs. So, this effectively removes the tax on tax issue, making the overall pricing structure fairer for businesses and consumers. So another strength of GST was its positive impact on revenue generation. By broadening the tax base to include more goods and services, GST brought a larger share of economic activity under taxation. The increased revenue from GST had reduced Malaysia's fiscal deficit and provided a stable source of funds to support public projects and essential services. This revenue stability was a major advantage, particularly in times of economic uncertainty. And lastly, GST significantly enhanced tax compliance. So the GST system requires businesses to report both the GST they collected and the SST and the GST they paid, making it more transparent and easier to monitor. So this encouraged better record keeping and compliance, helping formalize parts of the economy that were previously unaccounted for. So, as a result, the GST system reduced the potential for tax evasion and increased overall accountability in the tax system. So, we're going to talk about the weaknesses. So, the first weakness of GST was the readiness issues it created for businesses, particularly small and medium enterprises or SMEs. Unlike the previous SST, GST required detailed record keeping, regular reporting, and tax filing processes. So many SMEs found these requirements costly and difficult to manage, as they had to upgrade their accounting systems, hire tax professionals, and adapt to new compliance standards. For many smaller businesses, this change led to additional administrative burdens and financial strain. As a result, readiness issues made it difficult for businesses to adapt to GST and led to operational disruptions. The second weakness was the inflationary pressure caused by GST. So when GST was introduced, it applied to a broad range of goods and services. And even though some essential items were zero rated or exempt, it still led to an overall increase in prices. This added tax burden was often passes on to consumers, contributing to an increase in the cost of living. So for many households, this inflationary effect meant higher expenses for everyday goods and services, which put financial strain on consumers and reduced disposable income. So this inflationary pressure was a major factor in public opposition of GST, as it was seen as raising the cost of living. So lastly, the weakness of GST was its disproportionate impact on lower income households. So GST is a flat consumption tax, meaning that everyone pays the same rate regardless of their income. However, for lower income families, this tax took up a larger portion of their income since they spend more of their earnings on goods and services. So even with some essential items zero rated, the GST still broadly applied to many necessities, creating a regressive effect on lower income households. So this added financial burden made it more challenging to these families to meet their basic needs, leading to public perception that GST was unfair to the less affluent and amplifying the opposition against it.
Next, we move to the recommendations. In order to implement this policy, there are few weaknesses faced by the government, as Safiyyah already explained. For the readiness issue among business, the recommendation is for considering reintroducing the GST at the lower rate of 4%. It is suggested by the Federation of Malaysian Manufacturers. First, from the business perspective, a lower GST rate of 4% will help stimulate business growth by making goods and services more affordable to consumers. This is helping a small and medium enterprise who often struggle with a complex tax compliance. The reduced rate will give them a room to manage their tax obligation effectively. Also, the reduced rate will significantly ease the burden on our middle and lower income family. A 4% GST will have a softer impact on household budget while still maintaining the benefit of broad-based tax system. These recommendations will help the government legitimate needs for stable revenue to fund public service and development. On the other hand, we also have the people capacity to manage their cost of living. The second weakness is inflationary pressure. The recommendation is to establish a framework for regular monitoring and review that will assess the impact of GST on different income groups regularly. This allowing us to make timely adjustment to policy as needed. The goal is to ensure that no group, especially a lower income family, unfairly burdened by tax policy. A regular review can help ensure that the GST is being implemented correctly and prevents business from unfairly rising price due to confusion or not following the tax rule. By ensuring proper implementation, it will reduce unintended price hike, which were a major concern when GST was first introduced. The final recommendation addressed the disproportionate impact of taxation through implementing a tiered tax structure. This progressive approach carefully considers the diverse needs of different societal groups. Under this system, basic necessities such as food, medicine, and utilities will carry lower tax rate for low-income families. This ensures essential items remain accessible to those who need the most. Conversely, non-essential and luxury goods will bear higher tax rates, enabling wealthier consumers to contribute more sustainably to the tax base. This differentiated approach creates a more balanced tax distribution across society. This recommendation ensures our tax system remains fair while generating necessary revenue. In conclusion, the introduction of GST in Malaysia marked a significant step in modernizing the national tax system, shifting from the previous SST to a more expensive and effective framework. While the initial challenge, such as public resistance to the price increase, posed a hurdle, the GST continued to play a critical role in expanding the taxable base and improve revenue collections.